And that's why considering buying a business is really important. Now, when somebody says, okay, cool, this sounds interesting, I'm going to go out and buy a business, what are some of the major pitfalls people make when they first go out and look at buying a business? Businesses, real estate. Which is the better buy? Today, we are going to talk about this. If you're an investor, you're looking at saying, where do I put my money? Do I put in the stock market? Well, that's not today's call. We're not going to talk about that. We're going to talk about investing in businesses as owning a business. We're going to talk about investing in real estate, because really, at the end of the day, when you buy real estate, you're really buying a business. And so when we want to compare those two, I've got Shane Wilson here. We're going to talk about investing. Man, I am so excited. Guys, this is the money. This is the mindset. This is the mentoring podcast. Let's go. Shane, welcome to the show, buddy.
Hey, thanks for having me. I am glad we're talking about businesses and real estate, because honestly, when I started real estate 20 years ago, if I had known more about businesses and the value of businesses, I might have taken that track over diving headfirst into real estate, to be honest with you.
You know, it's one of those things where people always say you've got to invest in a hard asset like real estate, and it's going to hedge against inflation because, you know, as the currency goes down, the inverse happens in a lot of the other asset classes. In Canada, this is the first time in 40 years we've really seen real estate plummet in value. We've had properties where they went from, you know, almost near $1 million down to about $600,000 in value. And where somebody's trying to make that up over the next bunch of years, it's going to take some time to get that back. You put that together with the interest rates cycling up, and so the cost of carrying that property, because in Canada, we don't have fixed mortgages like you guys down in the States. And so every 5 years, we got to redo. And if you got done with the redo while they're at the highest point, your properties would have gone from cash flow positive to massively cash flow negative. That's a huge risk that's not been considered when looking at real estate. Now, take that and put together with business, there's risks in both. And I want to kind of talk about that. When you say you might have considered more businesses, why do you say that?
Because I believe one of the key things that people don't understand about real estate investing is there's a difference between real estate investing and running a real estate business. Those are actually two different things, two different skill sets. So if you want to invest in real estate, I think that's fantastic. But I think the optimal path, honestly, might be developing a cash flow business in another sector, another area, because you take that cash flow and then you invest in real estate. A lot of real estate investors who are like, I'm a real estate investor, and then they have a flipping business. Well, that's a business. Like flipping is a business. So I think the key thing is understanding there's a difference there. A lot of people read Rich Dad, Poor Dad, and, you know, you got investing quadrant and business quadrant. And that's one of the things that didn't click in my head when I first read that book when I was in my 20s was there's a difference here. And building a business to use that money to funnel into investing while you're building an asset in a business is a bit more of an optimal path, whereas real estate doesn't have a lot of cash flow. So you're chasing those checks, you're chasing those commissions. And that's the biggest thing is not enough people make the difference between real estate investing and a real estate business.
The idea of buying a property and then doing the BRRRR strategy, the buy, renovate, rent, refinance kind of a thing, that is a business. Buying and flipping a property, that is a business. Buying an A-class, 150 unit apartment building that is stabilized, that has property management, that has asset management, that is in a stabilized thing that you just put money in and you see checks come back out again, that's an investment. And those are, so when you look at that, I think a lot of people, you're absolutely right, get it wrong, where they put the idea that flipping is investing in real estate when it's really operating a business.
Right. I look at it as investments for your future, and you're hoping to build for future income, future assets. If you're having to flip a house for income right now, that's a business. So that's the easiest way that I look at it. And real estate is great long-term, because if you hold on to real estate, you can rarely go wrong. Like even if you bought in 2006 at those market prices, you'd be way ahead now. And that was considered a real crazy time back then. So when you hold on to real estate, you're good, but that's investing in real estate. And people get sucked into real estate investing as being and it's really a business. And a business requires skill sets such as sales, such as marketing, generating leads. And there's a lot more to running the business that people jump into real estate and don't realize that it's more than just real estate. It's a business and understanding those skill sets.
Yeah, totally agree. And when somebody started looking, saying when would then be the right time to consider to invest into an asset, such as, long-term asset that really it'll pay in long-term results, or versus investing into a business to get that cash flow? When's the right time to do both?
So I feel like, the cash flow business is the base, the foundation. And then you take that cash flow and you invest that in, or you get chunk money. So like you could have commissions, you could have flips on top of your cash flow business, but you take all that money and you invest it into the investment side. And when I invest is when I come across a real estate deal that I recognize this is dirt cheap, this is a good deal, and the numbers, I can't really lose on this. A lot of people, when they get into real estate investing, get caught up in the ego of, I want to do 100 deals this year. And then you start making bad choices, letting your ego run you, let your emotions run you. And if you focus on a cash flow business, it's pretty repetitive. You gain clients, you gain customers, you create your cash flow going up monthly. As a real estate, though, like you said, you're taking on a lot more risk. Real estate investors underestimate the risk of debt. That's actually a risk factor that real estate investors don't factor in. And like you said, if those rates are resetting every 5 years, in commercial real estate down here, it's every 3 to 5 years that those are resetting, you can find yourself in a very hurting position because banks are your friends until they're not.
Yeah, absolutely. Yeah, I mean, Grant Cardone went through that with a lot of his properties, commercial properties, where he went into a technical default, where they all kind of came due. And because the properties are driven down in value based on the shifts in the market, he was over leveraged according to the bank's perspective, even though he's making payments every month. Even though everything was well looked after, they're like, we want the money back. He said, well, I've done my good job. I'm okay. And they're like, no, technical default. And if you're not in a situation that you can handle those kind of pivots in the market, we're seeing a lot of that happen right now. You can be in a really, really tough position. And that's why cash flow becomes so important. And that's why considering buying a business is really important. Now, when somebody says, okay, cool, this sounds interesting, I'm going to go out and buy a business, what are some of the major pitfalls people make when they first go out and look at buying a business?
I think one of the biggest pitfalls is buying something they're totally unfamiliar with. So the businesses that I run are all real estate related to a certain degree. So I have a property management company that's a cash flow business. I have an insurance agency that's adjacent to that. We focus on insurance for landlords. So it's adjacent to that. It's very similar. I think a lot of people, maybe say an accountant trying to buy a cleaning business, two different sectors. And so stick with something that you're familiar with or that is very adjacent to you that you can combine with what you have going on now. And then understanding, are the numbers really the numbers? When you look at numbers for buying a business, are those numbers legitimate? Because people have a tendency to try to fudge numbers and stuff. So digging down and doing your due diligence, those would be the two biggest things that I would suggest someone looking at buying a business to consider.
The first one I think is one of those things where people think I'm a whack job because of all the things that I'm doing. We've got our real estate business, we've got our mortgage business, we've got our podcasting business, we've got our AI tech business, and we're buying a bookkeeping business. We've got a business brokering business. We've got all these different verticals, and people are like, you're insane. It's like, no, the same customer will buy from each and every one of those businesses. So it's a wallet share game. And it's just, they're going to buy it from somebody. We already have the relationship. So if I can reduce my cost of acquisition by providing more value to the existing client base that I'm serving, that's a great situation. And that's why we bought into these other businesses.
Right. If you look at any corporation, they have divisions, right? They have divisions that are separate but together under one corporation. So it makes sense to me to combine and stack different businesses that work well together. As long as you got the staff to manage it and you can grow at a pace that, is manageable. Yep. I think it's great because I believe in diversified income. I was one of those got sucked into the market crash in 2008 or so. And all I knew how to do back then was flip a house and rent a house. I had no other skill sets. So I have PTSD for back then. I've learned different skill sets, and I'm very, very passionate that I rather have small income streams from 2 or 3 different sources. So if one goes down, I could just focus more on the other. And that makes me feel safer and more comfortable at night because I'm like you. People say I'm crazy because I do insurance, I do real estate, property management. We have brokers. We're getting into business brokering and all that as well. So people will say, how do you handle all that? If you have good people, you can do it. And as long as they're adjacent to each other and they're not too far apart, it's very manageable.
Well, I think so. And The easiest way to figure that out is do a really good job of defining who your perfect client is and what else are they buying? Like your perfect client who loves doing business with you, what else are they buying? And so if you can say, well, they're going to buy this, and say, well, with the same resources that I have today, could I bring that into my ecosystem? The answer is yes. Perfect. Go out and buy a business that's been doing it for a while. Say they have a customer list of, say, I don't know, 1,000, 2,000 people. Well, that's 1,000, 2,000 people who you could also pivot over to buying your other products. So now you've grown in wallet share, you've grown in revenue. What a beautiful situation for growth.
Yeah. And if you're buying a business that's already in place, that is already cash flow and that already has the talent, and you grow that business, you're increasing your net worth. I think one of the secrets that people don't realize is a lot of wealthy people got wealthy by building a business and then selling that business. Real estate is a really good vehicle to grow your net worth, but a lot of people gain wealth from buying a business, building it up, and then selling it. That usually gets a lot of people over that first $1 million hump.
Yeah. Well, and when you have the idea of buying a business rather than starting a business, this is, I think, is one of those people like, I want to start the business. And it's like, no. And this is the hardest thing you can do. Like starting a business is literally the hardest thing you can do. The first $1 million your business will ever make will be the hardest $1 million you will ever make. After that, you've got systems, you've got models, you've got people, you've got scale, you've got relationships. It becomes a lot easier to create that sustainable growth because you can attract a lot better talent. You're not bootstrapped, and it's a whole different ballgame. So if you can buy a business that's already doing that, it's putting yourself in a way better situation.
Now, a lot of the skill sets from real estate transfer over to business. You can get very, very creative on deal structures for businesses, on their finance structures. There's a lot of different ways to buy a business. I think a lot of people don't understand that you don't have to pay $500,000 cash for a business. Most business transactions actually have a lot of owner financing involved and creative structure involved. So a lot of those skill sets kind of go both ways as far as real estate and businesses is what I found.
Yeah, absolutely. I think just like when you buy a house, if you buy a rental property for $1 million, you're not going to fork out $1 million. You're going to fork out 20% of the $1 million or 30% of the $1 million, depending on your leverage comfortability and what the business can hold for cash flow. The same thing applies when you're buying a business. If the business does indeed have good cash flow, it's probably going to be relatively easy to finance. If the business has bad cash flow, it's probably going to be hard to finance. And so those are going to be some of those indicators that if you're looking for a cash flow business, should be relatively easy to get some financing.
Right. And one of the most difficult businesses to get financing is, say, restaurants. So they don't like to finance restaurants. And that's a good indication that that's a hard business to be in. So when you're looking at businesses that actually are easier to finance are probably a better choice to look at being in. Yeah,
I totally agree with that. When I started a construction business back in 2005, and I tried to get financing, and there was no, we don't finance that sector. The bells should have been ringing in my head saying, what am I doing here? Why am I doing this? Because, if I would have stayed in the software space, money was just flowing in that space. And that definitely should be an indicator. Money follows success. And if a space typically has a higher degree of success and you can navigate into that space and be successful there, you definitely be able to attract the capital.
Yeah, if you look at the business like the construction business, so that business, not a lot of reoccurring revenue, and financing is based a lot of times on reoccurring revenue. So a business where you have to go out, hunt, and kill your food each month is a more difficult business to be in. And the rug can be pulled out under you at any time in those types of businesses. If the economy goes south or some black swan event, you could be left in a bad position. But if you have a cash flow business, it takes a lot to really beat that business down. If you got reoccurring customers on contracts and you keep adding more customers over time, even if you lose customers, you're still building forward.
That sweet, sweet sound of MERRR is such a beautiful thing. MERRR being the monthly reoccurring revenue. It's basically the same thing as having tenants in an apartment building, except you have rights as the landlord. And so it's a really good model to be able to build up that recurring revenue. If you could find a situation in your business to create it, whether it's through services or software, or what have you, memberships, subscriptions, these things create that value. And it's almost like an annuity. And when you look at financing something like that, you can look at that as a cash flow and discount it and create some wealth with that.
Right. And I love combining that. So once you reach a certain level of that cash flow business, then you can start looking at that chunk money. Like what kind of businesses do generate large chunks of money that you could sell? So like being a business broker, you generate large chunks of money, or even real estate commissions. What can you generate large chunks of money from to combine with that cash flow business? And you're starting to optimize different cash flow types that you could reapply to your investing.
Yeah, absolutely. And that's why for us, the bookkeeping business was good to add as a part and parcel with the business brokering, because the bookkeeping gives you that monthly annuity, whereas the business brokering, it might take you 6, 8, 9 months to package out a deal. And because there's a lot of, we'll call it corporate staging that has to happen. You have to get everything in right. You've got to make sure all your SOPs are well written. You got to make sure all your documentation around your people are all put together. You've got really good inventory control, whatever else there is that makes that business saleable. You got to go through the corporate staging. And once you do that, the business can get a higher return on the,
Yeah. And I like I said, I think if people focus on something they know that's adjacent to them, I know we're talking about doing a lot of different adjacent businesses at one time, but I do think people should start with one, narrow it down, get good at it, and then add on to it, especially after you have SOPs and procedures and people in place and you know that everything is set. Then add on to it. And then that way you can build it over a reasonable period of time and not overstress yourself and not develop something that becomes a snowball that you don't have control of it.
Yeah, that's, one of the things that we talked earlier about was the idea of deep versus wide. And I kind of want to jump into that a little bit and get your perspective on, some people say like go wide, other people say go deep. What's your thoughts?
I like to try. So I think it's a matter of expansion and contraction, and you're either expanding or contracting, and there's no right or wrong. So you expand, you see what's working for you, and if something's not working for you, it's okay to contract back down to what's actually making money and working for you. And then that way over time, you're keeping what's good and you're letting go what doesn't work for you or what doesn't fit you necessarily. So my perspective is I like to expand out. And then when I realize I'm starting to lose focus or I'm starting to lose grasp, I analyze, what am I doing? What's really making me money here? What has the long-term potential to make money? And I kind of cut out which one's in the middle and I contract back down. And then once I contract back down, everything's good. I look for other opportunities to expand again. That way, it's not always about expanding, running wide open, but it's just managing risk. Overall, I think it's just managing risk, managing where you're at.
Yeah, I think with any investment, that should be one of the most important couples of words, which is risk and return. And you need to look at that. And as you're expanding and going wide, you're going to be doing little litmus tests saying, is this work? Does this work? Does this work? As you grow. And we've added product lines into our business that we've removed, 3 to 6 months later, just because they just weren't a good fit. The profitability wasn't there. The client retention wasn't there. There's a lot of churn that went with it. And so it wasn't something that we could scale with it. Where we looked at other aspects of the business, we said, well, this one's a really good scaling product. This one here is a really good entry product that's going to allow us to get us into the scaling product. And so being able to pick those things and grow those into the business allowed us to go wide, but yet deep. So I guess the word wouldn't be or, it'd probably be the word and.
Yeah.
And wide.
Yeah, I think that's a very good way to put it, and kind of summarize what you said, fail fast, fail forward. That saying right there applies in business very much. Try something, see if it works. Doesn't work, move on. Don't worry about it. Don't get hung up on it and look for ways. Each level's always a different bottleneck or something that you're trying to overcome in the business. Take property management, for example. We're at a stage now where we've got to find more contractors, right? So that's our bottleneck now. There's always going to be different bottlenecks that you've got to work through. Yeah. And that's what I love about business is that it's an adventure. There's always something new. There's nothing mundane about it. It's something new every day.
Yeah. And that's the beautiful thing about it. And I think, one thing about owning a business outside of real estate is that ability to be able to pivot is, where you said, like you can run into a bottleneck, you can run into a problem. You're going to say yes to this, no to this, and keep on moving and shore up your investment by managing the risk. Whereas within real estate, you definitely are making that decision for a long haul game. And a lot of people, I think they get into real estate looking for those quick wins, especially if it's flipping or BRRRR strategy and they're really looking at forced appreciation. Those are great elements to be able to work on, but know that you're better off in real estate on the long game as truly being treated as an asset that has a long-term dividend versus something that I'm trying to punch revenue.
I feel like one of the biggest mistakes that investors who started since COVID is making is that they don't realize COVID and that time frame was not a normal market, and people got those quick wins. People got that quick appreciation. And I feel like a lot of new investors haven't adjusted to the fact that we're actually approaching more of a normal market right now, where real estate is a long-term hold. If you buy a property, traditionally, it was about 3 years before you can recoup costs if you're a homeowner. So I think there's going to be more opportunities for deals, but I think those quick wins are not what you're looking for. It's a long-term game when it comes to real estate. And even in business, it takes a little bit of time to solidify and build a business. That's why you might want to buy a business instead, because you can skip that 3 to 5 year mark of where you're just surviving, trying to make it. And you could buy a business that's already there. But like you said, you could pivot. It's quicker to be more nimble and move in a business versus real estate, where you have that asset, you have that debt. Market factors can affect you a bit more.
Yeah. Well, I mean, again, I'm going to pick on Grant Cardone. If you look at that dude's business, I mean, what has he got? He's got, I think, 6 operating entities, maybe 7 or 8. He's always looking, investing in businesses, him and Brandon Dawson. And so they're always dumping into businesses. But that steady Eddie in the background is real estate. It's not where they're looking to say, I'm making today's money. That's where they're looking to say, I'm making legacy money. I'm making generational money. This is where I'm going to look after my kids' money. And it's not going to pay the bills today. And I think a lot of times what we see is people get caught up with I'm the Uber driver and I want to get into making money. I'm going to get into real estate because that's where it makes all the money. And they're looking for that fast cash to come out of real estate. And I think a lot of the gurus, and I'll quotation figure those, because I had a friend of mine, Lorraine, she's a real estate agent up in Canada. And she said, you've got to be careful when you listen to some of these gurus, because a lot of them, they made all their money during that bump of COVID that you're talking about. And so they just made an enormous amount of money during this bump that is probably never going to happen again. And they're going to tell you in this market to behave like how they behaved in that market. And it's just not right. It's a different market. It's a different time, and it takes different skills to succeed.
Also, too, I had someone tell me a long time ago, they sold real estate courses and stuff. And they basically told me there's a lot more money in running your mouth than there is in real estate. So, a lot of content is good. There's a ton of content on YouTube and stuff. But if someone is primarily selling you content, that's probably where the majority of their money is coming from, not necessarily real estate.
And what they're really telling you is that the coupling of running a business together with real estate is where you get the true value, because they're running a business of, as you say, running their mouth. They're running a business of teaching courses. They're running a business of running events, and that generates revenue, which is really important, because if a lot of their liquidity is locked up in capital, in real estate, they don't have that monthly churn that they need. And so what they're saying is by their actions, they're telling you that if they're running a business of coaching or training or events, that is a business. So they have a business, and then they have real estate.
Yep.
Perfect marriage.
Yeah. And so, be smart enough to look below the layers of what not just someone is telling you, but what are they doing? Yeah. So look at, you're right. They're selling courses. They have a business. They have an online business. They're combining that with real estate. And you combine that with all kinds of other stuff, sponsorships, speaking gigs, all that stuff. That's an entire business by itself. And it's adjacent to what they did, which is real estate. So again, it's adjacent businesses stacked together. And if you look, that's what most of the online speakers, that's one way that they have created that cash flow business that you're talking about.
Yeah, because what they're doing is really using what we're talking about today as a modicum for success, because they've gone adjacent, they've gone into wallet share, they've gone in from a capital market of buying real estate into the capital market of buying shares. But the shares give them more liquidity, more nimble, more quick access to capital to be able to then either A, grow that business more, or B, park that wealth into the real estate. So they're doing exactly what we said, but not promoting the business side.
And it's just being smart to see what people are doing. And not being a sheep that gets sold, but what are people doing and how are they doing it? Information is good, content's good, but when you could see past those layers, That's where you sort of level up on the scale of being a business owner and an entrepreneur.
Yeah, I think it's the idea of it's not what they say, it's but what they're doing. Their actions are going to speak more than their words, and watch where they pay attention, and that's where you should be paying attention. And so when we look at buying a business, we talked earlier about the numbers, and the numbers are really important, going through the analytics. What are some quick ways that somebody could analyze a business effectively to be able to take apart some of those numbers that are given in front of them to say, are these real or not?
Again, if you can get profit and loss statements that's been certified by a CPA, that's a good first step. If you're getting something wrote down on a piece of notebook paper, that's probably not so good. And then if numbers just don't make sense, for example, we had somebody come to us wanting to sell a smoothie shop, but they were making like $27 on a smoothie or something down there. The numbers didn't make sense.
That's a really good smoothie.
Yeah, it was.
They must have been selling.
They were taking the numbers to offset something else. I can't remember exactly, but yeah. So do the numbers make sense? If it's too good to be true, it probably is. If somebody's selling a business for dirt cheap, if the multiple on what they're selling it for, they can make their money back in 1 year, then why are they selling that business? If it's too cheap, what's behind the scenes of why they're motivated to sell that quickly? You've got to be careful of that, because you don't want to step into quicksand. You don't want to take on someone else's problem and make it your own. So due diligence really is the most important part of buying a business. Verifying those numbers as much as possible and just digging down. Don't be afraid to ask questions. Don't be afraid to ask for documents, and verify.
Yeah, I think the idea number one is audited financial statements. Those are extremely important. And I have a mortgage business, so I'm about to say is not congruent with what I do believe. But I think you got to get the tax statements, and the tax statements are going to be like the absolute lowest because they're going to write off maybe some things that, are discretionary. Maybe they're going to pay their Aunt Louisa, who's going to be, working in accounting and, to get rid of some profit. So some of these things I get it are going to happen. But at the end of the day, that gives you the raw deal of the numbers. And we've seen in things like restaurants, is the sales really the sales? Is that debatable? Well, if CRAs or IRS is listening to this, I don't know. But, those are the questions you have to ask yourself. Then the second thing is how scalable is that business going to be once that owner leaves? How much is the business going to shift? And that's a big question.
One thing to look out for too is the space. If they're leasing a space and that lease is coming up for renewal in 6 months, verify that owner is going to renew that space, because we had a couple businesses come to us and turns out they couldn't renew that space. So that really hurts the value of that business. So that's another key thing. Make sure a location you're getting is there for you.
Yeah, restaurants are notorious for that. That happened 3 times in my city where, once was to my brother-in-law where they had a business. They grew it from nothing. It literally was a shack, made this amazing business selling, shucking oysters. And it was just a great restaurant. And then it came to the lease renewal and the landlord went, it's going to be 10 times the cost for the lease. It's like, what? Yeah, it's 10 times if you want to stay. So he had to go. And then as soon as he left, the landlord just opens up shop right in that spot, with like maybe a slightly different spelling of the names. And these things can happen. And that's problematic when you're really reliant on that location. You've got to know that if you're buying that business, to know that there's continuity in the property. But let's talk about continuity in the operations, because when the owner leaves and now, what does that look like? Can the business continue?
Right. So let's take an insurance agency, for example. That owner may be a key person in getting those policies. So you want to make it a smooth transition, and you want to try to keep that owner on. Like if it's possible to even offer the owner compensation to stay on for an additional year or 6 months to transition out, that's one way to go about it. Because if that owner just ups and leaves, a lot of people, you will have and you'll probably have, say if it's an insurance agency, some of those customers are going to disappear a little bit anyway. So you need to realize that on that book of business. So any industry where there's a key person involved, when you're looking to buy that business, you probably need to account that there's probably going to be some client loss if that person leaves. The next thing, though, even more important in the business owner, I think, is the key person under them. Because usually I know in my business, I have a key person under me. If she left, my work hours would go up drastically. So I would want to identify who the key person is in the business that you're buying, get on very good terms with them, make sure they're happy, and make sure that they're on board with your vision and your plan of where you want to go as well.
Where size becomes really important when you're buying a business, because if you buy a business where, like Deborah in accounting, just knows that custom proprietary accounting system, and Deborah's 65, and you're buying that business, and maybe there's only like 6 or 7 employees, she represents a whole accounting department. And as soon as she leaves, you're at a huge deficit. And can the business keep on operating? I don't know. So you're absolutely right, is that you really got to assess the human capital element of the business and the viability of them staying on during the transition, not just the clients, but the actual employees themselves. What about the vendors? Are the vendors going to still do business with you now that the other person's gone? Those are some things definitely to consider.
And if you have a business that is relying on that key person, do you have a vision of how you can make it less reliant? Is there standard operating procedures or systems or automations you could put in place so that if Deborah did leave, it wouldn't be a total collapse, or that, you can divide the workload out? So analyzing, we're looking at a business where you can add value and how you can structure that business to be even better. That's where you can really excel. And that's where you can really add value. On the opposite end, when you sell the business, is how you can grow it and excel it past where it is now.
Yeah, absolutely. I had a very fortunate experience. I think it was like late 90s, early 2000s, working with a company that bought basically 1 or 2 companies a month, and just helping them ingest those companies into their big organization, and just being part of that transformation journey for the change management that was required, and just seeing where it could be successful and where it was not successful. And a lot of times that was personality issues. But it was interesting because you could see how, setting up really good systems and models, if a company came in with really good systems and models, it just flew, no problem. If a company came in and it was very siloed, and this department doesn't talk to this department, and, this one's really dominated by, the mayor of the department, and nobody else has a say, it became a very difficult ingestion into the business, and took a lot of turmoil to actually get it to be successful. And so when you're looking at your business, either in buying or in selling, those kind of things, looking at those strategies, those SOPs, those structures, those models, I think are extremely important to do.
Yep. And then going back to the vendors, are those vendors on contracts with you? Are they? The other thing is that business owner, do you have a non-compete so they're not going to go out, start another business, and then steal your vendors? So that's one thing. And then liability issues. Is the business you're buying, are you vetting that, the paperwork's done correctly, that things are not just halfway done when it comes to contracts and documents? Because when all else fails and everybody turns antagonistic, they go down to the documents and what's in the documents. So making sure those are tidied up along with the financials is kind of a critical factor as well.
Yeah, absolutely. Well, when you go to buy the business, there's different ways of buying it. There's ways where you can buy the shares of the company, or there's ways where you buy an asset sale. What do you think is the pitfalls of both of those processes in purchasing?
I'm sorry, say that again.
When you're looking at purchasing a business, you can either purchase a business by buying the shares of the company, or you can do an asset purchase, which is just buying the client list, transferring the leases, and doing all the asset style of a purchase. What's the pitfalls of each of those, and what's the advantages of each of those different styles?
I would probably prefer to the asset base, but that's just me. The shares, so you have to buy the shares out from the people who own the business previous. So if there's multiple people involved, that could get a little more complicated. And speaking of multiple people, if you bring in partners in the businesses or dealing with a partnership in the business, you need to know how you're going in with that and how you're going to structure that. So if you're buying assets and you're starting a new company, how are you going to divide the shares between you and the partner? So it depends. I don't think there's one set way to go about it. What do you think?
Yeah, and I don't think there is one set way. I think there's value, at least in Canada, there's a value in a share sale, because you can get a one-time capital gains exemption where you can sell it with a tax-free advantage position. So that comes that way. Mm-hmm. But when you go to an asset sale, you're looking at, you're really buying pieces. And so in that, you're definitely protecting yourself from, if there's former litigation, any sort of tax obligations that maybe the business didn't disclose. So you're definitely more protected, but you might not get the same advantage in going with the share side of things. But when you talk about the partners, actually, it's interesting that you bring that up, because that was actually one of the problems in a business that we were going to buy. The biggest challenge is it was very much the whole company owned a lot of the company. So out of, I think there was like 35 shareholders, but they're also active participants in the business. And they were the highest performing parts of the business. And the big liability is, okay, well, if they sell out and they're gone, who's to say that they're not just all going to start up little competitors all around in the cities? And so that became a challenge, because there were so many structures that you had to purchase to make it come together with people inside the company, which means they all had exits, and that was challenging.
Yeah.
So we ended up not doing that deal. And I look back and I'm still 50-50 whether we should have done the deal, but we didn't. It was complicated.
So let me ask you a question. Where do you think people should start? Like what market level should they start at if they're looking to buy a business?
Well, I agree with you. I think they've got to, first of all, do an assessment of their talent and what are they really good at? What do they bring to the market? And if they're really good at accounting, they need to find a business that's really successful at sales. If they're really successful at sales, then they need to find a business that could really stabilize SOPs. I mean, if you go out and you buy a business that, all the systems and model are great, they just need some kerosene pouring on an already burning fire, and you're really good at marketing, really good at sales, what a wonderful opportunity. Especially if the market, they're really underutilized in that market. So I think knowing where you're going to bring some accelerant into the business, I think is really important. And knowing you're going to fit into that business, I think is really important. Because if you're not good at what that business is doing, or you don't love what they're doing, and I don't mean love as in a passion project. I think those are the dumbest things you could do. Passion belongs in hobbies. It doesn't belong in business. I think business is something that your passion should be the success of the business, because the success of the business will come because you're focusing on it. I think success begets success. So I think, it has to be something that you really identify with, that you can say, I can bring value into doing this and running this business. And I think that's what they should be looking for. So I think they should be looking bigger also than what they originally intended. I think a lot of people, just like when they buy real estate, they'll go out and buy the single family home or the condo or whatever. I mean, the condos are the ones that are the toughest because generally speaking, they don't cash flow, and give them a few years and the condo fees are going to eat up all their profits. And they're now stuck with this thing that they have to sell, pay capital gains to get out of it. And in Canada, we don't have 1034 exchanges. So they're kind of stuck with that. And then you're going to pay tax, or they're going to keep on keeping this property. And so it's this trap that happens. And when they look at going out and buying a business, are you buying a trap? In the sense that, are you going to go out and buy that restaurant or that, pizza parlor or that, barber shop or whatever else it is? And you're really buying a trap. You're really buying a job. And I think a lot of times when people look at buying a business, they'll look at the numbers, but won't look at saying, what is my role in this business? And can this business operate without me? And how much do I have to put into it? If I have to put a lot into it, it's really, you're looking for a BRRRR strategy in a business, not in real estate, but you're doing the same thing in a business. So I think you got to know, are you doing a BRRRR strategy with this business? Is this just a cash flow right at the door? Does it match your personality types? Does it match your skill sets? And so you're going to be able to be successful. I think that's the most important thing they had to do, is self-assessment.
Right. My friend, she bought a UPS store. She actually worked there. She bought it from the owner. And then, so Megan has this job that she bought for herself, essentially, because she has to be there and she's having trouble on staffing because, they don't have the wages to have, long-term staff members there. So it's like her and her husband are working a job that they bought for themselves, essentially. So I think that's one of the most important things you just said in this conversation is don't buy another job. You want to buy an actual business with systems that you can improve upon and grow. And obviously you have to have time into it. But if you're in operations and you're not on the outside looking down on the business and improving the business itself, and you're stuck in operations, you're going to be stuck there and you can't grow it effectively.
Yep, absolutely. Yeah, I think, too many times people buy a job, but I think we're sort of classically trained to look for jobs from school. I mean, they always ask you, what do you want to be when you grow up? And it's never said like an investor. It's, I want to be a doctor. I want to be a plumber. I want to be an electrician. I want to be one of these functional tasks. rather than I want to own multiple businesses. I want to own income streams, and I want to build and grow successful organizations. That's something that's a hard thing. The schools don't really push on that heavily. I think there's a pivot coming. I think we're going to see. I mean, you can see already a lot of the schools are really introducing leadership into the schools, and hopefully there's a good pivot like that happening. But it's going to be a long haul for the schools to pick up on that. And you've got to deprogram that out of your brain when you start going to true entrepreneurship, is just to pull that out. That your mission, your sole mission is you need to create revenue. You need to create profit. You need to create revenue. Now, you might be like Google, and the revenue is going to be 10 years down the road because you just got your revenue is investors. You're looking for capital, but that's still, you're raising capital. That's a different form of revenue. And so you're always out looking for growth. And that's something that has to be reprogrammed in our brains.
Right. And following up on business being a long-term project, earlier you said people ask if this is your passion. People ask me, because I do property management, and people are like, how do you do property management? It's such a difficult business. And do you enjoy it? And I can't say I enjoy property management, but I enjoy business. I enjoy creating systems and structures. I'm not actually out there collecting the rent from the people. I have a staff member who does that. So I enjoy being an entrepreneur and building a business. And that's the process that I enjoy, that I take pleasure in. If you don't have that, if you get stressed out too easy, if you are very cautious by nature, buying a business may not be for you, because it is a roller coaster, and you got to be able to be a problem solver and solve challenges and be willing to ride a roller coaster, be willing to fail and make mistakes. Otherwise, you could be a good key person for a business, but not everyone is a business owner, but it is a very profitable, very rewarding route that will shape you as a person if you're willing to take it.
Yeah, I think, we ran an event just last weekend. We called it the Black Tie Muay Thai event. And so we had a nice big networking with all these, super amazing people in real estate and business. It was super fun. There's about 1,000 people there. It was a lot of really good time. Chris, great job. 25-year anniversary of Mass Academy, shouts out. But the thing is those people who are in the ring fighting Muay Thai, the percentage of people who could actually do what they just did is so small. The same applies to people who are going to be successful as entrepreneurs. Everybody who wants to be an entrepreneur, but not everybody wants to put in the work. And if you're saying, well, I don't want to go buy a business, I'm just going to start a business because that's easier, it's completely wrong. It's easier to buy a business than to start a business because it already has inertia. And if you're not willing to take a risk to buy a business, you probably shouldn't start a business. And
buying a business is a shortcut. If you want to start a business, you're starting from scratch. So you have to go get that client base. You have to go get the marketing systems in place. You have to output the cash to get the marketing going. I mean, if you're starting a business, realistically, it's 3 years out before you're comfortable. You're sweating. The first 6 months, you're sweating, you're grinding, you're working. A year in, you might be lucky and start getting somewhere. And then 3 years out, you might have a stable business where you could just shortcut that and buy a business. And if you vet it properly and you're not buying a trap, like you said earlier, it's a shortcut. And then you can build value on that asset, and you could flip that business just like you would a house on down the road.
Well, I think a lot of people get seduced and they get lured into the task rather than the result. They love the task. They love the task of being in the business, but they haven't fallen in love with the result of the profit. And it's probably because they have a bad relationship with money, to be honest, because a lot of people are like, oh, wealthy people, or money doesn't buy happiness. It's like, well, no, money doesn't buy happiness. Money is an exchange of value between two parties. And so when you give value, generally you'll get value. And now you have a currency of what I call is a currency of impact. Now you can choose to do with that money whatever you want to do. You can choose to reinvest it in the business. You can choose to go put it into a charity. You can go take your family on a vacation. You can go buy Maserati or, go blow it at the casino, whatever you want to do. But you choose the impact that comes out of that. And I think if people can solve that problem, that's why this is the Money Mindset and Mentoring podcast, because I think money mindset has to be solved first. You get that solved, then you can get the next thing. And the next thing is obviously you probably need a mentor. I mean, one of the great things about buying businesses, there's other businesses out there like franchises. And a lot of these franchises already have systems, already have models. They already have mentors built into the business. So literally you're just plugging money and then pulling money out. In Canada, we've got this, and not, just shameless plug a business in Canada, but it's a company called Tim Hortons. It's a franchise. It's a coffee shop. It's a license to print money. I mean, people buy those and they come out and it just spits out profit because they figured out everything with that business. What a wonderful opportunity.
Yeah, I think people fall in love that I want to be an entrepreneur. I want to do this by myself. Instead of just a franchise, everything's already figured out. Just plug and play. That's set. That's done for you. Why not just go that route? But we have this ego that I want to do this. I'm the entrepreneur. And that's a difficult role that most people, you're probably going to fail.
Absolutely. Nobody succeeds alone, number one. Nobody will succeed at any magnitude alone. I don't care if you're Muhammad Ali. Muhammad Ali had people around him to help him be successful. Elon Musk, people around him to be successful. Whether you like him or not, there's people around him that help him be successful. And the thing is, you can go on your path alone. I mean, I look at it as it's like you're staring in front of the jungle and you want to get to Rio and it's far off in the distance and you can take that first step into the muck and start trudging through the jungle and chop out and make your own spear and make your own knife, and the piranhas are biting off your toes, but you're still trudging on. You get malaria, you still keep on going. You're scarred up, you're beaten up, you make your own clothes out of leaves and whatever else you do. And finally you get to Rio. You did it all on your own. Nobody showed you, nobody helped you. That was your journey. You did it completely on your own. Or you could do this. You could turn to the left. You could walk over, grab the keys off the table, climb into the car, drive for about 6 hours, and now you're there. You're on the shoulder of giants. You didn't make that road. You didn't build that car. You didn't make that map on how to get there. The GPS did it. But you got there. You didn't own the whole part of the journey, except the fact that you got to the destination. So are you in love with the destination, or do you want to go through trials and tribulations? It's up to you.
Yeah, and going back to having a mentor, that also is a shortcut to things. Money is the first step, like you said. If you can't manage your money, you can't manage a business. I always recommend the book Profit First. I think this is one of the best books someone could read if they're looking to build a business. It will tell you, how you should probably allocate your funds for a business, and just follow that. And then that's your money part. That's taken care of. What business do you want to go into? Find someone who's done that. Get them to be your mentor. You can buy a business. You got someone you can bounce ideas off of. And mentors isn't like this some guru type figure. If you're going to conferences, you're going to associations, you just find someone who's a little bit further along than you. Always look at it. There's 3 tiers you want to work with. People who are ahead of you, you want to associate, talk to them, be in that group, people on your same level. And then you want to teach people below you, because teaching other people actually reinforces everything you learn from your mentor. So you do all of those at one time, and that helps you grow as a person and as a business owner.
Totally agree with that. When you look at teaching is the best way to learn. And you don't have to be miles ahead of the person that you're teaching. If you're 1%, 2%, 5% ahead of them, you've got something that you can teach. One of the greatest ways that I learned Brazilian Jiu-Jitsu is I started teaching classes. And in teaching classes, I realized very quickly the things that I didn't know, and then really realized the things that I actually did know. And the beautiful thing was with Brazilian Jiu-Jitsu, again, shameless plug for Brazilian Jiu-Jitsu, is that you get to test it right then and there and say, in a live situation, does it work? Because the thing is when you're sitting with a mentor, or you're sitting with a book, or you're sitting with, a role model, somebody can really help you. Because I believe you need a mentor, and you need a coach, and you need a role model. Those are the 3 things you need. If you're sitting with any of them, they're going to give you information. Now it's your responsibility to take it, go out and test it, and make sure that it works.
Yeah, what I found is information I get from mentors or courses or wherever, YouTube even, I apply it, I test it as it's given to me, but then I tweak it and adjust it to me and my processes and my personality, because each person is different. So one process, while generally is going to be about the same, might be a little bit different for each person, but you only do that by actually taking action and doing. A lot of people are information junkies and just take in the information that feels good, but they don't actually act to see if the information is legit or not.
Yeah, absolutely. I mean, I've been to so many real estate conferences where people bought memberships for 10, 20, 30, 50, $100,000. And I'm a member of this organization. Cool. Have you done anything with it? Oh, soon. Years go by. I'm still thinking about it. You got to get into action. Action's where you see success. It's not sitting in the classroom figuring it out. It's actually going out. I think one of the best statements ever said is massive, imperfect action beats perfect planning.
Yeah, a lot of people get stuck in the middle of could, should, would. Could I do this? Should I do this? Would I do this? They get stuck in that land instead of actually going out and just doing it. They start thinking about, I could do this. Oh, I will do this. Instead of putting it on the calendar and saying, this day I'm going to go do this. You've got to take things out. I was talking to a person, we'll call her Jane, and she's like, I'm going to change the world. I was like, okay, well, how are you going to change the world? I just have these great ideas and I'm going to do it. How? What's your steps? I'm just going to do it. I was like, okay.
Well, you have to have the action plan that's going to take those higher level thoughts. Simon Sinek does. He says, start with why. Perfect. But he doesn't say finish with why. He says, start with why. And then you got to take that and move that into, okay, why? Then you move that to how do I do it? Then what am I doing it with? And you move it through those words, and you're actually going to start to get into execution, because execution is where everything's going to come together.
Yeah, execution and being relentless. I think the relentless mentality, that's a very good book by Timothy Grover as well. But just that mentality that no matter what, your why is going to be strong enough that you're just going to keep going no matter what. If you're in that desert and the car breaks down, where you're going to get out of the car and you're going to walk to Reno. You're going to figure out a way to make it happen no matter what the obstacles are. And you just have to be relentless in your pursuit and not give up. The people who lose, the people who don't make it, are the ones who give up. That's the only way you lose. If you keep hitting the nail with the hammer, eventually you're going to get strong enough and you're going to push that nail all the way down into the board. Same thing with business or real estate or anything. You keep doing it long enough, you keep being around the right people, and you keep failing forward and taking action, you're going to figure out what to do and how to do it correct if you just are relentless and persistent.
Yeah, I totally agree with that. I think discipline beats talent. I think every day discipline shows up when talent doesn't. And I think there's many times where we're looking for talent when we should be looking for discipline. And just get into discipline. Start building up systems, start building up models. Because we know that when we go to value a business, the business isn't valued on talent. It's valued on the systems. It's valued on the models, the repeatability that if I buy this today, is it going to perform the same way tomorrow?
I feel like that being intelligent actually can be a hindrance, because if you're intelligent and you can see 20 different avenues, sometimes the person, let's go back to the real estate crash. Simple example. My friend Jerry, pest control guy, that's what he does. That's his cash flow business. 2007, I was buying houses. I talked to Jerry. Jerry says, these houses are expensive. I was like, no, they're going down. It's going to be great. 2013, Jerry says, these are really cheap. I'm going to buy some houses. Super simple, didn't overthink things. It was just, is this a good deal or not? And Jerry was much more successful than I was during that stretch.
Yep. No, the more that I got into complicated formulas to figure out certain things, the more I put myself in a little bit of hot water in the real estate market, where I'm like, no, I think the government's implementing modern monetary theory, and because of that, there's this perpetual cycle of capital, and that was a bad idea. Yeah, but you keep on going.
Yeah, the BRRRR strategy, that worked, like you said, until interest rates, and I think we're going to enter a phase now where you're going to see more people trying to get out of those deals, but that could be a quicksand trap, just like the business. You might be buying into something that's quicksand.
Yeah. I think there's a deal for everybody. I think one person's goal is another person's coal, or whatever the saying is.
Yeah.
And it could be the right deal at the right time for somebody else. I mean, if you sold your duplex that you might own tomorrow, it doesn't mean it's a bad deal. It just means it's not a good deal for you right now. And as long as that person does the numbers and the numbers make sense, it could be a great deal for the next person. because they're at a different stage in life. They want to do different things, and maybe they want to do it their way, and maybe their way is better. Who knows?
Or they may see an opportunity that you didn't see. You know, perhaps there's an extra parcel of land that they see they could branch off and sell or build on themselves. So being able to see opportunities that others don't see when you're looking at either a business or real estate, you know, as a way you can add value.
Absolutely. Well, dude, I think we've really done a great job of exploring real estate, the pitfalls and the successes that can happen. I think looking at businesses as a super viable opportunity to be able to make revenue streams and how to really assess, will it carry forward based on the systems and models, looking at the numbers and how important that is, and then making sure that you match that business, that you're going to bring that value to that business so that when you make that decision to make the move forward with it, you're going to drive that value so that you get the return you're looking for. Is there anything that we've left out, any stone unturned, any check box that needs to be checked off in this process?
I don't think so. I think we covered the entire gambit here. I would just tell a person this was a lot of information and we branched out to a lot of different topics. Just take it step by step. If you're looking to buy a business, first step, what are you good at? What would be a good potential business for you? And then go from there. Look for the next steps after that.
Yeah, I think that's a perfect, great step. Well, Shane, man, it's been definitely a pleasure having you on the show and talking about two of my favorite things, real estate and business, and slipping a little bit of jiu-jitsu, as I always have to. And guys, this is the money. This is the mindset. This is the mentoring podcast. Thanks for joining. We'll see you on the next one.